couldn't figure out why it seemed that I was getting more no's than yes,
Is it that investors don't have enough money to invest, or is it that we don't have the right startups to absorb the capital?
We as investors as well are really struggling as well to get money.
I don't believe that there's only rhinos. I actually do believe in unicorns, and I think this is a question of definition.
I am quite hopeful about what 2025 would be.
Hi everyone, welcome to Coffee Connect, where we discuss facts about the ecosystem, the startup ecosystem, and today we'll be discussing the state of fundraising in Kenya and in Africa, and have an awesome panel. I'll start with Victor. Please introduce yourself and tell us your experience in this ecosystem.
Hi everyone, my name is Victor Maina. I am founder and CEO of Duka. Duka is a B2B marketplace that connects manufacturers to retailers or mom and pop shops. Those are the retailers that we work with. So my experience with the ecosystem, especially speaking about 2024, was interesting. We were going through fundraising, having gone through a fintech accelerator. Before that, of course, we were coming from for lack of another word, a dry spell for everyone in terms of raising funds. So it was nice that we were able to raise some money last year, and we are in the middle of closing that round as well. So looking forward to share more about how 2024 went and even the previous years.
It's not every time you get a founder, investor, and an enabler on the same seat. Yeah. So today will be very interesting. Enos, introduce yourself as well.
Hi everyone. Yes, I'm so excited to be here first of all, and thank you for everyone who's put this together. My name is Enos, and I work with the British High Commission as the country director of the UK Kenya Tech Hub. And so I'm really excited that this conversation has eventually started. And there's so much to be unpacked, so much to be shared. And the excitement comes at a very interesting time for this ecosystem. So looking forward to engaging further.
And finally, the people with the money. Njoki, introduce yourself.
Cool. My name is Adelaide Njoki, and I am an investment associate with the 54 Collective team, where we are a Pan-African-focused investor looking at investments from concept stage deals to pre-Series A deals, investing between $250,000 to $500,000 across multiple markets, so South Africa, West Africa, East Africa, North Africa, and more recently West Africa Francophone. And I'm excited to be part of the conversation.
Yeah, thank you so much. Hey, if you hear numbers today, it's in dollars. And I'm going to start with, let me introduce myself first. My name is Magothe. I lead the team at Startinev. Our goal is to bring everyone together for us to have a safer, better, more inclusive ecosystem. And I'll start with Victor. Yeah, you've talked about the dry spell in the ecosystem. And of course, I think for you somehow figured it out. How has that story been like from Techstars days up to now, going through visa and now almost closing another round?
It's a good question. So, 2021, we launched Duka. End of 2021, we had some fantastic results, and we were scouted by Techstars, became the first Kenya company to go through Techstars. And the first pre-seed round happens with Techstars. We get 120. Very excited, of course, but we didn't know what was going to hit us in 2022 because that's when it started. So very excited, everything looks fantastic. And then we start raising the round. And for a strange reason, I couldn't figure out why it seemed that I was getting more no's than yes, Because I was sitting with the big boys, they were excited about what Duka is doing. That's the time I got to know Njoki. And, we are going through this and everything makes sense, but people are saying no. Right? And I would say that we were probably the last people that closed before, as I say, the dry spell happened, because we closed that June of 2022. July is when we announced the round. and then boom, right? So startups start falling right, left, center. And the decision we had to make as a company is that we had been promised, raise money, but more money keeps coming. So don't worry, just grow, 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 grow. So do we do that or do we hold on? And I think what has kept us going is the fact that we refused to grow the way a startup just grows, burn, 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 burn through cash that you've gotten. We held from that and we decided to be very careful and very granular in terms of looking at the costs, looking at how every coin was being spent. And so the genius was in that idea, which I credit to my team and the advisors we have. Others would be part of the startups that are in the graveyard. Yeah. Now, fortunately, 2023, Visa came calling together with AWB Bank. We went through a fintech accelerator, and the greatness has gone back to track, and we are seeing more and more interest in investors. Now, the investors that had told us yes, no, they want to give us a check. The ones that had given us a check, they wish they had given us more money. It's a good place to be, but the experience and the journey has been quite an interesting one. One, watching, unfortunately, startups in our space, the big boys we looked up to, now gone. And if they were to go, who was I to stay, Yeah. But also seeing that we've still continued to survive, I think the team, I think the investors, I think the ecosystem, I think you and I, Innocent, have spoken, many times about this space. And it's good to see that there's still that support, that interest. And so I would say it could have gone way much worse. It didn't. We are happy. But it's also to make a promise to ourselves that we want to be an outlier when it comes to how startups perform in the country, just not in raising money, but also in our operations and returning to investors.
Enos and go to Njoki here. So on this side, Duka was lucky. Of course, there has been such a serious downtime. I think 2022 was here, then we went down. Last year we went further down. I hope we don't go further down this year. Is it that investors don't have enough money to invest, or is it that we don't have the right startups to absorb the capital?
Yeah. So I think it's multiple layers, right? So also you cannot look at the African market exclusively and exclude other markets, right? Yeah. So we have seen global contractions, global economies actually contracting, and essentially that is where we get most of our money from, right? So we do not have a huge population of local investors, local mutual funds, local angel investors reinvesting in our, in our startups, right? So we'd most likely, get most of our money from the US, Europe, in most cases. And we did see market contractions in those markets. So I actually do not think, the contraction was not surprising, because we saw a very similar trend in Latin America, North America, even the startup funding in those markets equally reduced just as a reflection of cycles in the market. So in the same way, there's highs and lows, booms and busts. It's just that ours was slightly delayed and we almost felt the pinch slightly later compared to most markets. I think we're almost the last ones, if I could sequence it. I do think we were the last ones, right? So I think to contextualize it, it's not an African phenomenon. It was a global phenomenon. It is a cycle that was expected to happen. Will we see this trend continue? I do not think so. I do think the last 2 quarters for 2024, we did see a ramp up in the number of investors. Huge investments, came into some of the largest companies that we currently know of in the market. So there is some, there's a light at the end of the tunnel. Also as well, so, previously, in the same way that founders, Victor and them were struggling to actually fundraise, we as investors as well are really struggling as well to get money, at the same time. So, but then I think towards the end, you'd see people posting on LinkedIn, some funds hey, our round was oversubscribed, our round was oversubscribed. So essentially we are seeing a lot of a lot more money actually coming into the market. I am quite hopeful about what 2025 would be. I think the only difference could be just the approach that people would have now. So for example, to Victor's point, so they had to think a lot more about sustainability versus growth at all costs, right? So in the same way, the founders almost like mindset had to shift. Investors' mindsets have also had to shift. So will we get to the 2022 peaks that we were seeing? I'm not sure, I don't know. Because even we as investors now, we're a bit more cautious as well. So like the DD will be a lot more thorough. The DD will take some more time. I think before the valuations were crazy. Like now we actually needs to make sense. Like what are the actual fundamentals? What are some of the drivers for these valuations actually that we are seeing in the market? So I'm hopeful that we are seeing a lot more money in the ecosystem, hopeful that we will see a lot more investments into 2025 compared to what we saw in 2024.
Interesting. I'll skip Enos yet again. And it's because there's a point I'm trying to...
I see what you mean. It's fine. Let's continue.
I'm trying to connect a conversation here.
That's great. Yeah.
Of course, it's not an isolated case where Africans were not being able to raise.
Yeah.
But then, Victor, your story started with Techstars, yeah? Could you confidently say that having come from outside the African market, that helped? And of course, the follow-up now becomes Enos with what you're doing with the UK Tech Hub. Then what role does it play for founders to look beyond our ecosystem? And it's of course because my mother is not going to invest in a startup. She's still comfortable buying her land. So what importance is looking outwards? Yeah.
I think, yes, I would say confidently that looking out, seeing what other startups had done, but there's also another important point, knowing what the investor wants to see. Because there's a lot of storytelling that needs to happen. But if I'm trying to get, investment from someone, which it's very hard that we'd expect investors, especially the big money, rests with those outside Africa. But it's very hard for me to get an investment from somebody who doesn't understand what I do. Yeah. And I think the positioning of our company was really helped by going through Techstars. We had probably the best mentors of people who had raised who had raised money, who had become unicorns. And these are the people that we're speaking to, So then it becomes easier to think, if I want 50 million check, how do I position my story, right? And it's because of what also Njoki said, that it gets to a point where also investors are not going wild in terms of giving money. Previously, I think there was a bit of not figuring out the African market. Now there's a bit of that trying to happen in the ecosystem. And even if it doesn't happen, then the longer DD that needs to be done to make sure that the startup fits, or I can confidently say in front of an investment committee that I can vouch for this startup. So how do I position myself? And that positioning happens when you have dealt with somebody who is where the money is. Like now in this case from Techstars, we went through Techstars Toronto. Then those investors could position us, or we could get to say the story in a way that they understand.
Yeah. And as Enos goes, so you start with people who are building unicorns. Of course, I think Duka is on the journey to become a unicorn. I think it's one of those startups. Enos believes in building rhinos instead for that. No. What is the rhino unicorn?
See how you do.
Rhino unicorn differentiator.
Yeah. No, actually, I don't believe that there's only rhinos. I actually do believe in unicorns, and I think this is a question of definition. Because I think when people throw in names like rhinos, and we have no idea what that is, we don't know what rhino is valued at, and it becomes such a hard conversation. Yeah. I know rhino has been used to depict resilience, but for me, for you actually to become a unicorn, you have to be resilient. Yeah. For you to become a unicorn, you have to be adaptive. Actually, resilience is a question of adaptability. Yeah. Victor has shared how things had dried up and you had to look for ways of how to survive. So you prioritized sustainability above burning. Yeah. Okay. And I think that's what we do. And for me, it's really amazing to listen to founders. Like I can stay the whole day just listening to founders. Why? Because I mean the they have their hands-on experience. They have a lot of wealth in how they dealt with things that came. Every day on a daily, you get a curveball. You just don't know how to deal with. You can't find that in books. However, you can't if you go to Harvard, if you go to YC. I mean, YC will give you the best practices, but when it comes to African market is another ball game. And that's why we're asking ourselves, like, even from the UK Kenya Tech Hub, yes, indeed, all these things really are available. Information is available, but to get the real relevant information contextualized and coming from someone who's been there, done that, is quite crucial. And that's what you're trying to build. And I think the other thing that you touched about, really looking outwards, you know, you can't really scale in the Kenyan market. When you're talking about scaling, is really trying to find out what are markets beyond Kenya, and simply because Kenya can't give you that 1 billion. If you have to do 1 billion in valuation and become a unicorn, Kenya won't give you that. So, I mean, we have to start thinking outward from the start, like, I need to take Africa. And that's how we're going to build unicorns. So from our end, we know how challenging this market is. And so we are saying, yes, we have some convening power, we have some political goodwill, and we have some political conversation, policy conversation, and of course, exploring things like East Africa community, and really just trying to build something around programs that would open up this market. And I'm always excited to mention about the growth path market linkage, which essentially just tries to bring about, it's a toolkit available online, but it has a checklist of regulations across countries. So let's say, for instance, in South Africa, in Nigeria, what is the regulatory requirement that you need? And so you have a checklist that outlines that. And then, of course, we've gone ahead to just interview as many companies that have scaled as possible to see what routes did they follow, and basically also build that network such that you can also we can also participate in helping you have a soft landing to getting to scale across Africa and create that unicorn. So we are more programmatic. It's from the UK government, and I think also I'll talk more just about what basically we are trying to do to make this an enabling ecosystem for.
Back to you, and it's still on the unicorn rhino conversation, because I think it's really misused. It's really misused out there. Then do we need to change the definition of what success means for a startup in an African ecosystem?
All right. Not necessarily change. For me, I think success is success. And I think defining success, of course, there are those, ultimately, when you get into business, you want to make a profit and you want to grow. And I know there are people who they are comfortable making a profit in a local business, in a local setup, and they don't have the the mindset or the push to scale. So to them, they get successful with the local market, and that's it. So you can't force them to scale. But there are others who they want to create a unicorn. And now when you're talking about a startup is an innovation-driven enterprise. I don't think that a startup really would be doing justice to just go local. No, a startup by definition, you basically have to go out there and explore the market, because you have a unique, what we call an unfair advantage, because you've spent a lot of time creating that advantage, that your ability to scale is what people are investing in. You get what I mean? Yes. And so ultimately it narrows down to, I know most people say that because of our culture, we are satisfied with small things. But I think things are changing, and I like the way things are changing, even just listening to the conversation and listening to a lot of just painting a picture of how positive this year is gonna be.
Yeah.
I think there's no better time to think about doing and getting to scale up. It's simply because there's so much concerted effort to actually make this happen.
And Njoki, $638 million raised in 2024. Sort of unpack that amount for us. Yeah, of course, Kenya was leading about 29% of the amounts raised across the African ecosystem. Unpack that number for us. Which sectors was it in, and potentially why was it in that direction?
That's a hard question. Come on. Anyway, let me see.
Do you want some coffee?
Six came into wait, fintech was leading, right?
Yeah, fintech was leading.
Unpacking that, I think. So one good thing for Kenya, I think we led across the core markets in the based on the amount that came into the different countries, right? So yay to us. Good job to the founders who are out there grinding and working hard, Victor. I think the market, or like the sector that got the most funding, and I think this is the usual culprit, is the fintech space. And I think so interesting. So there's a school of thought that says that fintech is overly saturated. And I think it's because we see so many companies, within that space, right? But I still think there's still some huge gaps. SMEs are still heavily underfunded. People still have, very little access to some of the financial products that we know of. Insurance penetration is still at a low. Like, in as much as we'd like to, to drive that narrative, I still do think it right. And I do think some of the reasons why fintech attracts so much money from most investors is you'd see that it's actually relatively easy to get your money back if you invest in a fintech versus most of the other sectors. I think you must have seen the memes of the agtech founders really, really struggling to keep up with the fintech founders. And that thing is not a lie, right? So, but if you were to think about it, how I view it is fintech has had so many years of change and foundation that sometimes we tend to forget, right? Like we have a working and functioning banking, infrastructure, right? We do have M-Pesa that people can actually build on top of, right? So we do have structures that makes it relatively easy to innovate on top of. It's almost as if you have the rails that you can easily just come, not easily again, I'm not trying to discount the work that you guys do, but it's relatively easy to actually build out a fintech product or a fintech solution compared to other, to the other sectors. Like if it's logistics, you need to figure out who has the warehouse, in which sector of town they're in. You get there, there's bales and bales of maize, and and they have no system. Then his neighbor is down the street as well. No system, no infrastructure at all, right? So then you need to figure out, okay, cool. So if I need to work with this warehouse as a logistics service provider, I need to figure out how I'm going to streamline how I work with this warehouse, this service provider of mine, right? So for you to solve that logistic problem that you are really passionate about, you're distracted now because you can't actually just solve the logistic problem that you need to solve. You now need to solve this warehousing problem that is glaring, and you need to solve it for you to actually run this product or run this solution or take this to market in a very seamless way, right? So while that's significantly easier in the fintech space where you already have these pillars that you can easily build on top of, right? So it's very easy for, if a product is truly needed, solving for a key gap, it's easy for you to pick up, acquire a huge amount of scale and actually make it easier for the investors as well to actually easily exit from that investment opportunity. So I think that those are some of the things that led or rated. If you're working on something in the fintech space, keep doing it. I think if I had a magic stick, if VCs truly cannot invest in infrastructure at all, and I understand like the VC model has not been built to invest in infrastructure, then we need other investors to come into the market and invest in the infrastructure. Then we can see this level of scale potentially, like the same thing that we're seeing in the fintech space, we'd be able to also see the same thing in agriculture, in logistics, in commerce, in trade, right? So, yeah, sorry, I digressed a bit, but thought to give my wish there.
It's a very important.
Yeah.
It's a key point. Yeah. Victor, Njoki has somehow painted a picture of Duka.
That's what I was thinking. I was like, why she setting me up?
Sorry.
For sure she set you up. Because now the question becomes, how easy has it been for you? Of course, I mean, the capital that goes into warehouse, figuring out all these agents if you need them. How easy would you say it has been for you? Also by the fact that
has it been? Anyway, but to answer your question, really, logistics, agri-tech, edu-tech now, especially in the African context, is such a complex issue that many people don't understand it. And if you understand it, you know that it needs patient capital. And nobody is willing to give you patient capital. I do think that VCs should seriously think exiting within 10 years. Not the 5-7 they give us. Especially in the African context, because of what, the question you've asked and what Njoki has said. So we get into Duka, and what we wanted to do was build a SaaS, something that would start with build for drivers, for operations, build for mom and pop shops to be able to manage their, the selling, and instead of having the book where they keep the debt, then they can keep it on their phone. So those are things that we are thinking about. And then the mom and pop shops, we get to their location, they say, okay, sounds all nice. Where is the flour? Where is the sugar? That's what I actually really care about. So we thought, okay, let's go to the manufacturers. The manufacturers were like, okay, we like what you're saying, that you can virtually bring together thousands of mom and pop shops. Where's the trucks? We're like, okay, that's a good point. So we went to the market and we got the trucks, and then the drivers are like, where's the work? We're like, okay, you're coming. And then we went to the mom and pop shops. We said, we know where the manufacturers are, we know where the drivers are. And they're like, so do we get you the goods? They say, yeah, give us ABCD. The drivers go and say, where's the fuel? Where's the tires? Where's the insurance? And so everything that you are touching is a problem you need to solve. Now, I would just like to mention, without mentioning names, that many of the startups that have raised money in this space of logistics, most of them have died because they then jumped into another problem.
Oh, wow.
Right? They were very successful seemingly, but either you're distributing products, but you're not handling logistics. What do you think? The next fund that I raise, 100 and something million or so much million, I'm going to put it into logistics. Because if I figure out logistics, but that's not what you identified yourself as first. That's not what you specialized in. So what happens? You get into a space that is so complex that if you're a logistics startup, you're thinking of tires. You're thinking of insurance for the vehicle, which is the asset, insurance of the driver. Now you're getting to health insurance. You're thinking about fuel. You think about, there's so many, you're thinking about when does the vehicle for him amortize as an asset. Now you're getting to banking. So complex layers that to a point where when you go and present this to the board, they're like, I don't even understand who you are anymore. So fortunately, logistics is my background. So, we've tried to really stay on course. It hasn't been easy. I've done things I thought I would do, go and convince mom and pop shops that they actually need to think of warehousing because I don't want to do warehousing. And they're like, what is that? And then you have to figure out education, and goes on and on. So what Njoki is saying is true. Fintech is, and I don't say this with any ill intention, relatively easier than some of these industries you're seeing, even education, right? You figure out the curriculum, you realize, oh, the curriculum changed, the government didn't give us a warning. So now you're like, okay, how do we build for the new curriculum? How do we build a tech space that can help a student be able to come up with a boat? Because that's what the government asked him. So, and it goes on and on, that the complexity surrounding the space need, one, a layer or a foundation that has been built by someone. Or a VC that comes, maybe I'll throw a curveball and say, a VC that comes and says, I need to invest in logistics, but I need somebody, for me to do that, I need a combination of warehousing startup, logistics startup, and then a startup that is doing distribution. And you guys just stick to your lane. There'll be times when you'll be wondering, shouldn't I do what the other guy is doing? But stick to your lane, yeah? And that combination can explode logistics. I think, and maybe it's because I'm passionate about it, we will never be able to move to Africa, where we want to move Africa to rather, without fixing logistics. It's about movement of goods and people. We can have all the money, but if you don't have, I mean, in the rurals, I can have the money. Sometimes you go to, during the Christmas holidays or the other holidays, and have the money product. So we need movement of goods, movement of cash, and also movement of people. And that's the infrastructure that is lacking, that Njoki is saying we need to build.
And a very interesting one. Both me and you, we are trainers for some few programs, yeah? And I think we repeatedly talk about the importance of having a very clearly defined problem statement. And I think I'm realizing that now the problem statement could be the reason startups are not raising, probably, yeah. How important is it? And from where you sit as an enabler, do you think that even other enablers are doing enough to push startups to actually build solutions for the right problems?
I think that's a good question, and also I have to commend Victor and Njoki, because what they have raised is quite crucial. Infrastructure, and asking VC if they can build the infrastructure. That's a challenge even for development partners. And I think, so this is a broader conversation, and how I look at it, just before I answer your question, is that we need to realize that there are two approaches that are quite critical. One is the value chain approach, that we need to understand business from a value chain perspective. Like, we know who's feeding what, and we know what we need to build across that value chain. So I think that is one thing that really I've also been keen to explore and understand. So when you're talking about Duka, what other things is it touching? And how can we build on this thing? So which again brings me to the other approach, is the ecosystem approach. I'm very big with ecosystem. Like, I'm usually like, there's no particular startup that was built outside an ecosystem. It's usually an ecosystem, and we can sit here and discuss how ecosystems were not designed to support startups, just couldn't take off. And it's, the Silicon Valley is one of very amazing ecosystem, because it challenged so much, challenged a lot of what was existing that didn't work for startups. But again, so basically that ecosystem approach. But now that you've asked about the problem statement, apparently our default setting is usually a solution. Without even, like, our default setting is always coming up with a solution. And we always had this statement that all problems have a potential to be addressed by a solution, or rather, all problems have a solution. All problems do have a solution, but not all solutions do have a problem. Because we can, if, let's say, for instance, when you give someone a hammer, everything becomes a nail. We've just talked about biases. So if I'm a developer, to me everything looks like an app, and the solution might not be an app. Like, you're dealing with people who are just looking for a simple solution. And that's why it's important to really get to the root of a problem. And so, without mentioning names, I know actually startups that raised. It's not that you will fail to raise, but you'll just raise the first round and you die. And this is the reason. When you haven't defined a problem so well, then you'll create a solution that is what we call a sort of a product. It's not necessarily a solution, because I think when you understand the problem, chances of creating the right solution are usually very high.
That's true.
But do you know you can raise with a product that no one wants? Let me tell you, you can put together a very good sales team, a pitch deck, and nail it. And you would actually just state the way, rather use the language that they're looking for. But now, let me tell you where the challenge comes. To get to PMF, to get to product market fit, is usually a question of, are you providing a solution to a real problem? Because you will have return customers and referral. It means that thing is working. But if you are creating a product and pushing it through sales, then you're creating a hype. If you build your startup on a hype, now people will be, have you had this? Have you had this? It can get viral. And that's how you can raise. You can just say, oh, we have so many customers. When it gets viral, it means many people are just doing the first experience with the product. Now, for the second experience, money won't buy that. However much you raise, that money won't buy the second experience. So you always want to give. Money is easy if you use it for the first experience, because you know, because it's a valid solution, they will give you the second round. Of course, you are going to cut down on customer acquisition cost by over half, or you actually are going to use the money to give you. That's the tricky part.
And Njoki, Enos has raised a very important from the investments you've already done in startups. How hard is anybody who's already raised be considering to make sure that they raise the second round?
I mean, that's a good question, and those are very good points. How hard is it? If I'm being honest, like, I don't want to put myself in the founder's shoes, but I do know a lot of founders actually do take some time trying to get that PMF, that product market fit, right? Because in most cases, you're trying to get PMF between that the seed stage, pre-series A stage. That's when you're really, like, you validated the problem, let's say, with the MVP, right? You got some money, built the product. Now you're at the seed stage, trying to now actually see, will the people come back, right? And I think in this case, one, it does take the founders some level of humility. That, like, you need to step out of yourself, step out of the business, and one, be able to, like, put in the right structures to actually see what metrics actually matter for this business. So what we see a lot, or like what we previously saw, actually, I think things are changing now. At least things are changing for us, right? Where people would be tracking revenue so much and not like the underlying figures. And because that is what made the investors happy, right? Like, you're tracking revenue, number of monthly users, MRR, ARR, people are happy, you're tracking that, you report that, and we're all happy, right? But then we look below the hood and we're like, actually, it looks like you're buying growth, right? Like, you're throwing money at the problem because none of the users are actually coming back. So I think it does take a founder to, like, actually be able to, like, have a very data-driven mindset and you need to also just be very honest with yourself. To say, one, can you put structures that would allow us to track the metrics that we believe are important for this business? So what that would take as well is, one, either have, because it's hard to actually manually track all these things, right? So I do see companies within our portfolios like being recommended to either use like platforms like Mixpanel, have that integrated very early on. And I do think sometimes founders either do this very later on and not consider to do it very early on, because at the end of the day, so like metrics like repeat usage, referrals, retention rate, almost like leading indicators of revenue, right? Because if those numbers are actually growing, it also just means your revenue should also be growing. So how hard is it? I do think it's relatively hard. It does take some level of humility. It does take some level of just get out, of the business as the founder, put in the structures, and also just as a, based on your understanding of the problem and what the solution needs to do, be very clear, like what metrics actually matter for this business, be able to like articulate that, then set up structures that allow you to actually track that. And I think, once you put those things in place, you should be good. And also the humility to say, if something is not working, you change it, you pivot it, because sometimes the thing is, it's not working, then you want to now force, right? Then you keep getting the same results. Then truly there's no use for what you're actually trying to do. So again, humility to say, actually either it could be the product is the problem. It could be where you're trying to get your customers from. Maybe that's not where your customers are. Maybe you need to change where you're getting your customers. Like it could be a number of things, So you need to sit down with yourself and to just see the different elements of how you're trying to like get your users or target your users, then essentially see what do I need to change as well. So I do think it does take a lot of like humility to actually get to PMF, and also like having a very strong data-driven mindset to actually get to PMF. How hard is it? I do think it is a bit hard.
Before we get into the shoes of the founder, I'll go back to the shoes of the investor. How many times, as a percentage or maybe as a scale, have you gone back and written a second check?
That's a good question. So we do have a portfolio of, so I'm not sure about the exact figures though. We do have a portfolio of slightly maybe more than 80 businesses. But just to put this out there as well, it's not because none of our companies are worthy of the second check, or like we don't believe they're doing well, that we should double down into the opportunity and get more stake and eventually exit at at higher returns, right? So it's because of how our fund was structured as well. So our previous fund was not structured in a way that allowed us to follow on into the portfolio companies that we currently have. But now with the second fund that we're currently raising, it would allow us to like see some of the portfolio companies that are actually performing well and see, we actually want to double down on those investments and double down on those investments. So it's not because they're not doing well, it's because of opportunity and how we were previously set up.
Yeah, Victor, how many investors have written a second check?
It's a good question. So it's very interesting. It's like in my head because I was calculating it as you were speaking. So out of the 6 investors that we raised the seed round, only one didn't give us a check. Wow. And it's because, to Njoki's point, they're not allowed to follow on. So some of these funds don't allow a follow on. So yeah.
And maybe to Njoki it again, does that mean maybe on the investor side we need to change something when it comes to how, because maybe it's just a borrowed model from Silicon Valley and elsewhere. Do we need to change the fundamentals when it comes to investing in African startups?
Yeah. I mean, in this context, or in this, like in the question of follow-on, I do think, so one, it's also important to realize that VC investors are also startups in themselves, right? So when you're starting off as well, you also don't know what's going to work, what's not going to work as well. Sometimes you also don't have so much leverage to like negotiate for better terms as well. So sometimes you might end up with a deal that, may not be the optimal deal, right? Sometimes also you're making the decision based on what you've been exposed to so far, then the market is ever changing, then you realize actually this model doesn't work now, and you need to change. So do VCs need to change how they go about the investments? I do think so, yes. So for example, 54 Collective, previously Founders Factory Africa, has really changed from what we used to do, a while back, right? So I think initially we were writing like $30,000 checks. Then we saw actually there's a lot of money in the market and we need to be competitive, right? A founder would pick a larger check compared to what we're trying to give them, right? So how do we ensure that we're also equally competitive and actually get in on some of those good deals, right? So we changed, like, how do we give or like write bigger check sizes? Then the other one as well is, so as an example, before we used to price for support, like most accelerators or like incubators that you'd see, or like venture builders. So we were a venture builder. We'd give you cash, but also we'd price our support on your cap table. But then there's like so much friction with founders. It takes a while to close the deal as well. And then you realize, you know what? One, from what we've been seeing actually, right, and there's evidence for this to actually show that founders, especially very early on, truly do need that support. It only becomes an issue when you now start to charge it and like price for it, right? So is there a way that we can be creative and say, can we find a way to actually give these services for free? Again, we change the model again. You get, so I do think VCs do need to actually take a very, or have a very flexible approach in how they go about the investments. And in this case, I'd like to say we are a good example of how, that evolution can actually happen. And, just ensure that you are giving founders like good deals and some of the best terms in the market.
I really love the panel today because I think we have everyone. So I'm going to throw Enos into the very deep end now, yeah. Development partners, yeah. They play a very important role for sure, but I think we've seen a few cases where grant money is in my view is not really ideal for a founder because of course, I can write a good pitch deck, no follow-ups and all that. Then do you think that we need to train our founders a bit better so that they're able to maybe use grant money to get to PMF? Then by the time an investor is coming on board, you can imagine you've raised $1 million, you've not figured out everything, then everything crumbles and then you become a failure story. I think we've seen some of those. Do we need to also change the model of how enablers are approaching this whole training of founders? I think we had a discussion with you. Founders are overtrained, over-mentored, Do we need to change that perspective as well?
Yeah. I think, well, when you look at the development partners, they have a big responsibility, especially in this part of the world.
Yeah.
I don't think in the Silicon Valley there's a space for development. I'm just saying. And yet we are busy copying their model, So we need to figure out what is the best model that can actually also accommodate development partners, but also just a challenge to the development partners to actually take time and learn.
Yeah.
What are we dealing here with?
Yes.
Because we are coming, and also there's an evolution of development. It came from a charity. Now we are talking about equitable partnerships.
Yes.
Now we are looking actively on having meaningful strategic partnership, where it's a win-win.
Yeah.
So there's actually effort to learn what are we dealing with in terms of context, ecosystem, what has changed, what has not. But just to say again, if there's no place at the Silicon Valley for development partners, we need to rethink how development partners need to support startups. Okay, we might come in as funders, yes, but what is exactly that fund doing?
Yeah.
I like the idea of infrastructure, building infrastructure in terms of let's say in markets that we don't have infrastructures, so that it can easily take off.
Yeah.
EdTech is such a hard nut to crack.
Yeah.
If you ask me, anyone who's in it, they just have bad stories. But I think it's because of one, infrastructure, and also policy and regulations. So I think our space really transcends. You can talk about policy and regulation and how to engage, because this is government to government. Learn best practices and all that. So when you talk about grants and how really it influences our businesses, you'll find that, of course, from a point of knowledge, it's quite crucial. We need some very basic fundamental knowledge on how to build startups. Okay, because I think that's where the whole challenge is coming from, because we have learned building local business, and to me, I usually say, if you have a local business model, that's a boiled egg. It's easy to eat, you can eat anytime, but you can't take it to an incubator and hope it will hatch. Okay. So, and I think I use that analogy, and I will keep on reusing it, simply so that just people get that, you know, there's something unique about getting into an incubator and accelerator program, and simply because you're trying to build a startup, an innovation-driven enterprise that has some unfair advantage that can be scaled in markets. When you have a mindset of a local business, and we give you a grant, and we want you to scale, you get the whole confusion from the word go. Like, of course, the company itself cannot sustain scaling. The mindset cannot sustain scaling. The best you can do with that money is buy a car, feel nice, and I'm just saying, because I mean that happens, and especially grant can actually ground your business, because of course your mindset is not to scale. But if we get to the mindset of scale, you will use the grant very well. Because you understand, okay, this money is hard to get. If I can only get this. Now, there's a gap still with these funds, because the gap is that we are driven by impact. And that impact can be a 1-year impact, which is usually sometimes not very reasonable. So we look for a boiled egg that we can eat and show something has happened. You become energetic and all that. Now, giving it to a startup and you're promising us potential, you know, that's basically what a startup does. It promises you potential. Ultimately, we have to account for VMF, VFM, or value for money, VFM. So when you're accounting for value for money, it's usually a very hard job for a development partner. Basically, you're asking, so where did this money go? And then you're saying, oh, it was used to do an MVP. Okay, who's benefiting? So some hard questions will come. And that's why there has to be a place where we really learn, even as development partners, how to help startups. It is a long shot, and you have to figure out, maybe after 10 years I'm changing this. But I don't want results. I can suspend results because of the understanding. After probably I can suspend results after 5 years. Let's talk in the next 10 years when you have already. So the last thing I think I would also mention, that you mentioned about the training and the foundational knowledge, is that I believe it is important to have the foundational knowledge of the difference between a startup and an SME from just the beginning, and also the development partners to know. I'll also mention about universities, because a lot of other countries, developed countries, a lot of spin-offs are coming from the universities. And I think that's another topic that we'll have to tackle at some point. But I'm excited because of the ecosystem. The ecosystem is now getting to figure itself out. And I think we are working on a startup school, and it's exciting to see that university really want this foundational knowledge. So I think that there's actually a place for that. But in that room, we need also development partners, those who have what they call those big ticket size to fund.
I once sat with a founder, and they were saying they hate grants and money from development partners because they have to write a lot of reports. So now they spend time reporting back how they use the money, and while they didn't really even figure out that MVP. But I stuck onto a point that Njoki said at some point, there's a lot of money. What did you mean? At some point you said there's a lot of money.
It was a copy moment.
So,
You just took copy.
I mean, as mentioned, we are seeing a lot more money coming in, like the last couple of quarters, right?
Yeah.
So hopeful for 2025. But also, I think previously we used to see a lot of our money coming from like the West, so like the US, Europe as well. But I think so more recently I've been seeing like this is from Israel, so like getting like interest from like other markets like Asia, the Middle East, So I do think Africa as a market is also like getting the attention of other markets outside of where we typically we get our most of our money from, which is also just a good indicator of where we're headed as a market. So yeah, I think maybe just to go back to that.
And on the same note, Victor, what do you think was the one thing you did right that got you the money you were looking for?
That's a very loaded question. That's a very loaded question. And I think there's what we did, there's what those ones in our cap table did. I would say myself and the team. There's also, and so everything is connected. So let me start with what did we do that was right? What we did that was right was the fact that we saw a problem that was big enough and we were bold enough to tackle it. I remember earlier in my knocking doors to investors' doors and looking for money, the question was, you can really spin this off to a fintech. Why not?
Yeah.
Right? And they would give me the check if I spin it off towards fintech. But what I had done is lived through the problem for a decade. So it was, I had it very strong in my mind that this is what I needed to fix. Then I brought together a team that really beautifully, came together and alive in that matter to be able to address the problem and feel the much I feel about the problem. And what I mean by that is that I think in Africa, the biggest challenge we have people with a passion, but lack of know-how. And sometimes I look at university students launching big things and tackling a big problem and lacking either one in our ecosystem, you're lacking that, mentors or coaches. And I'm not talking about a guy who's running a multinational in Kenya who puts up his hand and say, hey, I want to be a coach. I'm talking about a person who can coach a startup founder. How many of them can we say, right? Those ones who have failed don't want to speak about what happened. Yet they have valuable lessons that we can tap into. Those ones who are succeeding are so busy building that they don't want to speak about. So that we got from our team. One of my co-founders is a lady who I worked with at the company, at the multinational. The other one had built, fintech, had built logistics apps. It was easy. So that's what we did right. And then when it got really hard, we stuck to the solution we were trying to create. And why I would say that is that what happens that there's something that Njoki said about data. What I feel has really helped us is to go to the market and hear what those mama mbogas are saying. You send them a survey on their phone, they don't respond. You invest in going and talking to them and saying, Made, are we actually helping you? They're like, no. In fact, my unga ran out yesterday at midday, and then I called you guys, you didn't bring. And she doesn't care it takes 24 hours to bring. She just wants it now. So if you don't solve that, a broker comes, she goes with them. Feeds into, what are your market survey saying? Because in Africa, as much as we think we use phones that much, right? It's the Gen Zs, but do you think a Gen Z runs a mom and pop shop? So it's going to that. So those are things we did right. What I think the VCs we have in our cap table did right, and the investors, is something that many people don't speak about, which is portfolio management. How do you look? So Njoki, 54 Collective, they've invested in 80 companies, but it would be interesting, and not to tell you what to do, but you put those 80 companies in a board somewhere and look at connections. You see, this can help this can work with this. This guy, and so portfolio management. And then most of this, like you can imagine the knowledge that Njoki sits with. She knows Duka, she knows a fintech, she knows marketing organization, she knows, and if she brought these guys together and says, You guys just figure it out. You can work together. The magic that comes out of that, right? It didn't involve any money, but it's the area view she has of. So they did well on that one. I remember one of them gave us, a partnership that now is taking us to different markets. Taking us to Mauritius, because they said, invest in this company to make you successful. Take this check, it will make you successful. Then, boom, we were in Mauritius. So that's what I'm saying, and that's what VCs can do. What I think VCs tend to do, but they don't have that knowledge, I speak with a lot of respect with whoever it's due to, they think they figured Africa, and they haven't. So you bring a Techstars program, you bring any program that you think, and you push it to African, and that's what founders are saying. We are just being coached and mentored, but when he goes and implements it, it doesn't work. Why? It's not customized to what he wants or what she wants. So they do less of that, which sometimes they bring mentors, that don't figure out Africa as well. You're trying to mentor the guy, and the guy is like, yeah, you need to focus on data. And the guy is like, yeah, I get that. But the market surveys are the solution, So they did that, right? And lastly, we addressed a problem. And Enos has said it, Njoki has said it, you've said it. If you don't address a problem, what happens? And what you can look at is a cohort analysis. At some point, constantly we've been at 91% repeatability of our customers. When I go to our competitors, they tell me 40%, 50%. The cost kills you as far as it goes in terms of how much money are you spending acquiring customers. So how do you acquire them? You give them discounts that don't make sense. And they use you, but as soon as the discounts run out, the customer base runs out. So those are these three things that worked for us, and we are grateful for.
Of course, it's been such an impactful, knowledge-filled conversation. As we wrap up, I'll just give our closing remarks, and of course say what we do at our various organizations. But I'll go back to you, Victor, because you do something that I think we've discussed a lot of times here. My mother won't invest in a startup for sure, but we're starting to see founders reinvesting some of the money they're making back into the ecosystem, and you can share what you think is safe for you to share.
Okay.
How has that journey been now as a founder who's now investing in other founders in the ecosystem?
It's a good point. I think it fits beautifully to this conversation. So one of the things I realize is that I'm really passionate about logistics, if you like supply chain. You can say first mile, middle mile, last mile. And what I realize is that Duka will never be able to cover, at least for now, until we grow to really big, one, and even sub niches of that niche. So, and if you look at supply chain, you sort of see FMCG, you see cold chain. Cold chain has pharmaceutical in it. Then you also see, so FMCG, cold chain, and pharma. Pharma is pharmaceutical distribution, which is a big problem. Again, needs to be tackled by someone. And so what I did is identified organizations in those key sectors and give them small checks. So you have someone who is doing cold chain. We have someone that is doing pharmaceutical distribution. We started building mini warehouses in key sectors that we think. And this is not Duka, it's a company that I'm backing, building mini warehouses. We're talking about a 1,000 kind of facility in critical areas, which basically is real estate with it, but connects with tech. And we see how that happens. Those are the biggest pains that I have. Idea is that if Duka grows the way it's growing, it feeds to this organization, which later feed back to me. And that's basically what I was saying. So hopefully that can be the genius in what makes Duka successful, because they grow, we grow, we grow, they grow. So it's feeding off each other. And hopefully that, as I say, is the key to success. But I'm not saying I figured it out. I know Africa is a complex issue. So I'm just hoping that instead of pushing people to do what I think should be done, let me do it, and then I can say, I put my risk in it. And it paid off, or it didn't pay, so don't do it.
To Njoki, your closing remarks, but of course, if 54 Collective has an open call if your cohort is open for somebody looking for investment. Just one thing they should look out for, especially for your investment.
Yeah, so one, we normally don't have cohorts. We do look at deals on an open, rolling basis. So if you are working on something exciting, we are sector agnostic, so feel free to send it through to us. If you check our website, you can directly apply and send us more information about what you're working on. What we do look for, you have to be solving for a pain point that's truly a pain point. And also it needs to be a large pain point because essentially that also just affects how far you can scale the business and how much money you can make as a founder and how much money we can make as well as investors. So, and also just the team, we need to be able to see that you can execute, so have evidence of that. And yeah, all the best.
Enos?
Wow. This has been amazing. It was an absolute pleasure listening to all of you guys. And I'm really, I would say, I think now I'm seeing some vision out of what we were struggling to see.
Yeah.
Now I can see actually there's a lot of light towards this. And I think this is simply because I am an ecosystem person. And we, when you champion an ecosystem, what happens is that people tend to speak the same language, and it tends to be really easy to create these companies that can grow.
Yeah.
And I think our vision from where I sit is basically to support and get as many companies to be unicorns.
Yeah.
And I dare say unicorns.
Yeah.
and whoever wants to come with a rhino is still fine. But to be, in all honesty, I've enjoyed the conversation and really wishing all of you the very best in whatever organization you are in. And I think I'm here also just wearing the heart of our development partner.
Yeah.
That if there's anything we can do with you guys, we are open to have conversation, to have collaboration, to connect you. And the idea here is actually also to connect you to what opportunities that London has to offer, or the UK has to offer in supporting startups. There are VCs there, they're trying to figure out stuff, and we're trying to be the link. So, but we have, of course, to make sure that this ecosystem is working, even before you think about the rest. And so I will be happy. I'm just looking forward for the next conversation because I think this was really packed. And if you go through the footage, I'm sure you will find a lot of nuggets to actually spin them to another conversation that are quite interesting and quite fulfilling as well. There's so much knowledge that is within us. And that's why I'm actually excited for even the next episode. And thank you so much, guys, for taking time. I know you're a very busy person. Calls all over the place, but just finding time to come and share this information. And you see, this information is, there are people who sell information like no one's business. You invite them, they're like, okay, what are you paying me? But I believe like Boulder, I always use Boulder as an ecosystem. They said, if we can create porous boundary, that's a plus.
Yeah.
If people can come in and say, give before you get, not what is in it for me, then that really accelerates this ecosystem. So like-minded people like you guys, I'm just so happy to be associated with you guys. And Innocent, thank you for inviting me. Njoki said we've met. I don't know. But Victor, we've never met. But it's really amazing and well done. So thank you so much, and looking forward for the next episode. And I hope you guys this will now be a click of those conversations. We didn't allow the camera to see, but those conversations are quite important. Yes. Yeah. So thank you.
Yeah. Thank you so much. This has been Coffee Connect. I think for me, the biggest lesson has been for founders. Enos said, if you have an egg, you can take it to the incubation to get hatched. But if you have a boiled egg, just eat it. Yeah. So as you build your solution, you need to figure out: do you need to be incubated? Do you need to be accelerated? Are you at a point where you're at the eating? I think Victor is at the eating stage now, and you know, and even at times you're ahead now. You're giving birth to more eggs. Thank you so much for listening in. We hope to hear your comments, hear your views. This has been Coffee Connect in partnership with the UK Tech Hub and Startinev, and hoping to have more conversations and to have you as our guest. Please share as many comments, as many reviews, as many of these conversations as you'd want us to have. Thank you so much.